So starting already today, imports from Canada and Mexico are now taxed at 25%, with Canadian energy products subject to 10% import duties. In addition, the 10% tariff that Trump placed on Chinese imports in February was doubled to 20%. So what does this mean here for our economy in the Bay Area? KRON 4's Terisa Estacio spoke with an economist to learn more. She's here now with us in the studio.
Oh, thank you, Justine. Strawberries, avocados, blueberries, gasoline. Local economists say that the bottom line here, consumers are going to be paying more with these tariffs. The big question is how much and how widespread.
Some of the more visible areas are in food, fuel. These are the items that take up a larger share of the household budget.
Gary Schlossberg is a global strategist with Wells Fargo Investment Institute. On Tuesday, he explained what tariffs imposed on America's three biggest trade partners, Canada, China, and Mexico, mean for Americans.
Higher prices, particularly for people who could least afford it. We're talking about, in all likelihood, gasoline price increases, higher prices for certain types of foods, retaliation, so our businesses are up against it, at least for a time.
President Donald Trump has argued that tariffs in the long run will help the U.S., but Schlossberg says it is more complicated than that.
So as these industries move back to the U.S., could benefit some workers, but the impact of higher prices is spread more broadly across the economy. So it would seem to be a net negative for the economy as a whole, and certainly up front, as you pointed out, it takes time for these adjustments to be made.
Already large chains such as Target and Walmart have commented. Target CEO says prices will jump up, especially on items such as avocados, strawberries, and bananas coming from Mexico. Walmart says that they are working to aggressively keep prices as low as possible for consumers, but adding that they are encouraging all partners to find common ground that will protect consumers from price hikes. Schlossberg says that another concern with higher prices, whether tariffs could lead to a recession.
Will it throw the economy into a recession? Maybe not. I mean, the bulk of our activity here in the U.S. is more services oriented, so it tends to be less trade sensitive. So we're hoping that this may slow economic growth, but not derail it entirely.
And there is this. The president and CEO of the Toy Association says that the 20% tariff on Chinese products will be crippling, as nearly 80% of toys sold in the United States are made in China. In the station, or in the studio here, Terisa Estacio, back to you.
Thank you, Terisa. Stocks sliding in response to